Okay, in this video, I'm going to discuss the CARES Act Paycheck Protection Program. Now, this program is a program where the government has put out it within the CARE or allocated within the CARES Act $349 billion in favorable or forgivable loans to small businesses so that they can pay employees during the COVID-19 crisis. Now, the maximum loan amount is $10 million. One important factor is that all the loan terms must be the same for everyone. This program is going to be administered by the Small Business Administration. Now, this plan or program offers some very favorable loan terms. First is that there is no personal guarantee requirement. That is absolutely waived. Also, any requirements for collateral is waived. So imagine getting a $10 million loan that is totally unsecured. Wow. SBA fees are waived. Also, the maximum maturity for the loan is 10 years, so you get to pay it off over a 10-year period. Maximum interest rate is 4%. And the payments for the loan, your principal and interest payments, and any other fees assessed by the lender, is deferred for anywhere from 6 months to a year. So, who can apply? Well, all businesses, and this includes nonprofits, churches included, and veterans organizations. It also includes sole proprietorships, self employed, as well as independent contractors. Now, I should note that this video is not all inclusive, so do review the guidelines. There are other types of businesses that are also included. So do read the act for more details, but I'm focusing on the most common here. So, how to apply? You'll want to complete the Paycheck Protection Program loan application. And so, let's take a look at that. Okay, so here's a sample Paycheck Protection application. And so, um, and so here you'll see it is super simple. Put your business name, the address. Um, I know that we can, check these boxes and stuff like that, but I would recommend just printing this little bad boy out and filling it out, because you're going to find once you start typing in here, some of the letters are huge and things just don't fit. Like when I used this to enter a tax ID number, the whole tax ID number didn't fit. So I would just say print this document out and just complete it. So you're gonna business name, address, phone number, tax ID number, contact information. Here's where you're gonna drop in the average monthly payroll. Okay, and then also you're going to multiply it by 2.5 to come up with your loan amount. The number of jobs is where you're going to list the number of full-time employees that you have. You're also going to check off how you plan to use the loan amount. You're going to list the owners who have a 20% interest or higher stake in the business. If you're a sole proprietor, that's just going to be you. If you're a nonprofit organization, you're probably going to list, I would suggest listing the names of the board members. And also noted here, if you're a nonprofit, you're going to check this off if you're self-employed here or independent contractor, which in my opinion, these two are the same. Not sure why they made a distinction between them. So this is just flagging, these specials. So if you don't fall under any of these categories, just skip, uh, don't check off any of these. So here you're listing, you're gonna attach a list of the board members. Seeing that let's see, this is all the owners, okay? And so here you're gonna enter tax ID numbers, which are their social security numbers. Um, If I were completing this for a nonprofit, I know the instructions don't say this. I would probably list only the directors and officers. So that would be the president, vice president, secretary, and treasurer. Okay. I would not list all of the other officers and directors. They're looking for the key people who, making some of the major decisions for the organization. Um, let's see. So you're just going to answer these questions, yes or no. You're going to, yeah, just answer these questions, yes or no. Please note here, they want you to initial that you check the right box. Okay, same here. Initial to confirm your response. Looking for, let's see, felony or misdemeanor or crime against a minor. All right. Um, so responses to that: are you a U.S. citizen, permanent residence, yes or no? Still initial your responses here. And so you see how easy and simple that is. The next page, you're going to initial that you're making these certifications. So you'll read these carefully and initial that, and then also you're going to sign. Authorized business rep is going to sign here, and the owner sign here. Okay, and then they give you just more information about the application, and so you definitely want to let's see if they put nonprofits. No, they didn't mention anything about nonprofits. Um, No, they didn't mention anything about nonprofits here. So you'll want to just be sure to read all of this, all right? Because, it does speak to your obligations. So don't just sign the dotted line and say, here, take this in. No, take your time because you are responsible. Certain things could be subject to, penalties for non-compliance. And I think I even saw somewhere where, there was, imprisonment if you're using the monies for fraudulent purposes. So be sure you understand what you're obligated to under this. Under this with this resource. Next, you'll want to, now when you're submitting your paperwork, you will need to include documents to support any contributions or any computations. This is going to include your 941s as well as possibly a list of payments. Each business's situation is unique, so you'll have to just think about what it's going to take to back up the information you're including on the application. Where to apply? You'll need to apply through the SBA, different SBA lenders. These are participating lenders. These are banks, credit unions, and other participated lenders and financial institutions. Key point, you definitely want to inquire if they have prior experience in processing SBA loans. You want to be at the front of the line. You want to make sure that you're working with a lender who is familiar with this process. There's a lot of new financial institutions that are applying and getting registered to be SBA lenders, but I would not trust my application with a new lender, because they're going to be learned in the process. There's a learning curve in there, and I would want to make sure my application is going to go straight through. Okay, when to apply? The SBA is going to start taking applications beginning April 3rd for small businesses and sole proprietorships. And now, in my opinion, I think that includes churches and nonprofits in this particular category. Now, starting April 10th, independent contractors and self employed individuals can apply. Churches, do they need a 501c3 approval letter to apply, or do they need to be on the IRS's website indicating that they are private 501c3 approved? No, churches don't require a 501c3 approval letter to apply. Churches are automatically included. Churches are automatically considered nonprofit organizations. And I'm going to also note, I didn't put on my slide here, but I'm also going to note that I would even imply if your nonprofit lost its exempt status, I'd still apply to. Okay. Maximum loan, 2.5 times your average monthly payroll costs. We'll talk about what's included in the payroll costs. You're going to look at when we calculate the average, we're going to look at the period 1 year prior to the loan application date. So if you're applying in the month of April of 2020, I'd say you want to calculate from April of 2019 through March of 2020. What's included? So, what can we include in payroll costs? Because the key thing is we want to get the maximum loan amount. So, what can we include when we're calculating this? Well, we can include salaries, wages, commissions, or others or similar compensation. And so, in my opinion, similar compensation means housing allowance. If you've got high earning employees, you can only include up to $100,000 of their salary or their compensation. Um, Independent contractors, you can include payments to your independent contractors. We know they're not on payroll, but if you're making payments to independent contractors, you can include that in the calculation. Now, here, keep in mind, we're calculating the maximum amount that you can borrow. You can also include, when it comes to your payments to your independent contractors or sole proprietors, you can some of the payments, oh, the maximum amount you can conclude for them is $100,000 for the individual. Okay. Um, and so I want to point out that with respect to if you're self-employed, sole proprietorship, and you're the only one working, for the most part, this basically says that, uh, up to $100,000 of your compensation, you can use that for your own application as a self-employed individual. So your net earnings from self-employment is what you can include, up to $100,000. If your business, and we're not talking nonprofits here, but if you got a for-profit business and you pay cash tips to your workers, like a beauty salon or um, let's see, a restaurant that pays cash tips, that's include. You can tally up those cash tips in order to help improve or calculate your maximum loan amount. Any payments that you paid out for vacation, parental, family, well as medical or even sick leave to your employees. Now, this payment for vacation does not mean payment for you to go on a vacation. This is vacation pay that you pay to your employees for time off, paid time off. Allowance for dismissal or separation. So if you had an employee who was terminated and you gave them a severance pay, that can be included in the amount. And so keep in mind, we're looking at the pay over over the 12-month period prior to the loan application. So it's something that's happened in the past. Group healthcare benefits, including insurance premiums. So this is your group healthcare, not personal healthcare, group healthcare. Payment of any retirement benefits, payment of state or local tax assessed on employee compensation. So some states or some local government organizations charge unemployment tax or some kind of special city tax that they assess based on the employee compensation. Now that's paid by the employer. Now, if you have some state withholding or a special state that the employee, a state tax that the employee has to pay, or a local tax the employee has to pay, that is not cannot be included. These are employer payroll costs that can be included. So what's not included? Definitely not your federal tax withholding. So when you're taking federal taxes out of an employee's paycheck and you have to remit that money to the IRS, you cannot include that, as well as the Social Security and Medicare taxes. You can't include that, and maybe some others like federal unemployment tax cannot be included. Do read the guidelines carefully. If you're paying other kind of taxes, federal taxes, do be careful to read the guidelines for more details. Compensation of employee whose principal residence is outside of the U.S. can't include their compensation, cannot include that compensation. You cannot include any sick leave and family leave that qualifies for a credit for the Families First Coronavirus Response Act. So you'll need to do, if you're paying for sick leave and family leave, you'll need to do your homework to see whether or not first you can get a credit under this Family First Coronavirus Response Act first. If it's not covered under that, then you can include it in included with the payroll protection loan calculations. So, how can you use the money? Once you get your money, how can you actually use it? Keep thing, you definitely cover payroll costs because that's the purpose of it. Your mortgage interest. Now, I noted here, if your loan was incurred before February 15th, 2020, you can include that. Now, I put that in blue for a reason because within the act, when it speaks to qualified uses of the funds, it does not specifically say for a loan incurred before February 15th. We get to that February 15th piece when we look at the section where it discloses what what can be included for debt forgiveness. So I included that here, even though it's not noted within this section of the act. Also, other debt interest that's incurred before February 15th can be included. Now, note only the interest payments on these loans, not any principal payments, can be included. So, if you're making monthly mortgage payments, you got to break down that principal and interest, and only the interest payments can be included. Rent. If you have a lease where the lease is in force before February 15th, 2020, you can include the rent payments that you're going to be making. Also, you can include the utilities for any service that began before February 15th, 2020. Okay. So I guess this means if you signed a new lease and moved in, let's say you're deciding, okay, now you're going to get this money and now you're going to rent some space in April or May. Nope, that doesn't count because it's looking at leases and service utility services that are in place before February 15th of 2020. So when it comes to you getting your loan and we want to look at this loan forgiveness piece, okay, how do we make sure that debt is going to get forgiven? Well, one, you need to apply for the forgiveness after June 30th of 2020. Also, you want to make sure that you're paying qualified expenses and that these expenses must be incurred and paid within the 8-week period beginning on the date of the loan. Okay, so so you'll have to keep up with your expenses for that 8-week period and make sure they get paid and not just incurred. Also, debts. Your debts canceled under this program is not taxable. So, for individuals and businesses, normally when you receive a debt cancellation notice, the a 1099-C for debt cancellation, this is going to be, usually it's taxable, but if it's part of this plan here, you're not going to pay income taxes on it. Now, only the loan principal is forgiven. So if this debt gets to the point where, if you recall, I mentioned earlier that you get the loan payments can be deferred for 6 months to a year. Understand, the loan payments are deferred, but that interest, it's the payments are deferred, but I believe the interest continues to accrue. So if you should get to the point where it's at a place where it's accruing interest, only that principal is going to be forgiven. So don't let's say you calculate your stuff and then you wait till September or October to start putting in your paperwork to get the debt forgiven. No, you need to turn your paperwork in right away, so that that loan does not accrue any interest. Okay, so only the principal is forgiven. Let's see, not more than 25% of the forgiven amount may be for non-payroll costs. Okay, so it's not like you can take all this money and use it for something other than payroll. They want the majority of it, at least 75% of it, to go toward payroll costs. You also must retain the same number of employees, full-time employees. Okay, so if you reduce your full-time employee count, then that could reduce, or that then only a percentage of the loan could be forgiven. Also, when it comes to loan forgiveness, you want to definitely provide, you should expect to provide documentation. These could include payroll summary reports, list of checks, payments by category, checks or payments by category, and any other relevant documentation to prove your case that you spent this money on qualified expenses. And so, let's say, for example, it's a lease. We said that lease payments where the lease was started prior to February 15th, you probably want to include a copy of that lease. If you made mortgage interest payments, you probably want to show a breakdown of your payments from the lender where it shows how those payments were applied between principal and interest, and also some type of documentation that that loan was taken out prior to February 15th. So again, it's based on your situation, what expenses you're claiming to be part of the calculations for the loan forgiveness. Okay, so I want to share with you how to calculate the loan amount using my worksheet here. So here I've used the months from April to March, and so this is where you're just going to drop in your amounts. Leave this formula here. This will calculate your the totals for you. You can change these headers, depending on when you are applying. So if you get your application in May, then you can change it to show from May of 2019 to April of 2020, because it's going to look at the 1 year period prior to the loan date or your loan application. And so you just fill in the amounts, and this will all calculate for you. So I just kind of dropped in here. So like a couple of pastors get housing allowance, or a pastor gets a housing allowance. Maybe you got some contracted labor, and let's say you're paying salaries and wages. Let's just put in 2,000, maybe $3,000, $3,500 a month here. And I'm going to copy this over. And so you can see how it automatically calculates your total expenses as well as the average. So in this case, your average monthly payroll cost, 7,000. Well, yeah, I use the same amount, but here you're going to take your time and go through your financials and hard code the actual expenses for each of these categories here. And that gives you the maximum loan amount. The next area. Okay, so the next thing that I have for you is the full-time employee calculations. This section has to do with keeping track of the full-time workers so that we can calculate the maximum amount of the debt forgiveness. Now, I should tell you that this is broken down into three sections because there's three different sets of dates that we need to keep track of. The first set of dates is where we're calculating the full-time equivalents. That's what FTE stands for, full-time equivalents, not full-time employees, full-time equivalent. And so what we're doing is listing, for starters, the employees that work full-time. And this first group we're looking at the dates from February 15th through June 30th, all 2020. Okay, so this is the covered period. This is the risk period that the CARES Act is concerned about, keeping employees employed through this date. So here you kind of list, the months that they started. So here you see I've got some zeros, basically meaning that this person was terminated and did not work in April, or either this person here was hired in March and did not work in February. Okay, so here you can see it's calculating the total number of full-time workers. Again, people working 30 hours or more per week. The next group of workers are part-timers who, if you add up their part-time hours, checking to see, okay, does it equal a full-time job? Like if you have two part-timers working 20 hours a week, that equals 40 hours. Or if you have two part-timers working, 32 hours a week, that's more than let's say 15 hours a week, that's 30 hours per week. So that's pretty close to full-time. So here we're listing each part-time worker's name and the number of hours that they worked for each of these periods. So keep in mind, this is half a month up in here. We're only counting half a month's worth of hours there. Okay, and so here we're looking at what that equals on a full-time basis. If this group of people were considered one person, that's a little bit more than a full-time employee. Okay, so this calculates what your average is for this particular period. So that's the first calc we want is your average full-time equivalents for this time frame. The next, so this is going to be like when we do a formula, we're going to have to do some dividing. And so this is like the numerator for that division problem. When it comes to that denominator, we get a choice. Choose method A or method B. And so here's the calculation. Same kind of worksheet as above, but we're looking at a different time frame. In fact, we're looking at exactly 1 year prior to this date. So we got it laid out here. Maybe we got different employees, or maybe in this case, I'm looking at okay, everybody was on board full time uh, during this time frame. In fact, Amy, this doesn't make sense. So Amy, I'm going to put her as zeros here because let's say she was not there at all. Um, okay, so that gives us a calculation there. Um, and so here, basically, again, full timers, you're listing all your full time workers, and you're listing what months they work. That doesn't matter if you put zeros in here or just leave them blank. It's still not part of that calculation. Now, I should point out if you have to delete rows, that's fine and easy. But if you have to insert rows, I would insert above this, somewhere within this group. Um, so that you don't have to change let's see if I insert here and put a 1 there. Okay, so it did pick that up. Okay, so the key thing is you want to make sure when you're doing inserts and stuff like that, that it's not throwing off the formulas here. Um, and so again, we've got the same grid, but just a different time frame. It's the prior year. Who was working full time the year prior to? Okay, the next group that we have is or dates that we're looking at is instead of looking at a whole going back a full year and picture in time, now instead let's just go back 2 months prior to this. See, this is our covered period. This is the period of protection that they're concerned about. So instead, how about we just look at January and February of 2020 and look at what our average is there. So here we list our employees and the average number of hours that they work. We got the part-time and the full-time, but it's only for 2 months here. So you'll list their names and list the actual hours they work, and let it do the calculations. All right. And so this ends up giving you a calculation under the two different methods. Method A, based on method A, is basically saying you retained 80% of your staff, versus based on method B, you retained 100%. This is kind of looking at, actually, it's more, but it's basically showing that uh, during the year well, actually, this is the prior year. So if we were going back and looking a year and comparing the current time frame versus 1 year back, it's 80%. But if we're just looking back over the past couple of months, or the first couple of months out of the year, we've actually done better. We've hired 5.44 versus 5.25. So it's saying we're 100%. You've retained 100%. Knowing that's higher, but the limit is 100%. So basically, how does that affect the loan? So if the loan was 17.5 and you retained only 80% of your employees, then your maximum debt forgiveness is 14,000 under this method. So at one point, you're going to have to choose a method. And so, not quite sure when you're going to have to pick that method. whether it's going to be when you sign your papers or when you submit, I mean, sign your papers for the loan, if they're going to tell you, okay, what method do you want to use? And you have to check a box or initial something, need to know. Same thing, whether you're going to pick this one. So obviously, this is the better one in this particular scenario. So, but when you drop in all your numbers, who knows which scenario may be better? Um, I'm hoping that the system will allow you to, when I say system, when it comes time to apply for your debt forgiveness, you are given the option at that time, and you can submit whatever one works best for you. So in this case, 100% of your debt is forgiven, and there's nothing to pay back. So you can see how this, again, just drop in your numbers, be careful about these time frames, and see how it turns out. Now you can easily go back prior year. You don't have to wait. Prior year, we know what this is. So do your homework, fill in this information in advance. Go back, fill in, because this information has happened already. So go back and fill in this information, and then also you can fill in, what's going on for what happened in February, as well as March, and then as each month goes by, you can go ahead and update this so that you can see what the impact is going to be. Um, you might want to put in some temporary information. Let's say you're filling it in, and you're doing it, you're putting in your actuals here, but for this period in time, it's estimates. Okay, so you might want to, just kind of color code this, so you know that, okay, that's an estimate, and just, that you're just plugging in little what ifs, scenarios in here, just to see how is that going to affect your loan. So that's going to help you uh, do some planning. Um, yeah, you see me doing this here. Okay, kind of keep that border straight. Oh, why that changed that? Top border. Okay, so you can just kind of start filling in this, and using this as what ifs, and as time progresses, then you put in the actual information to see how that's going to impact the loan. Okay, the next worksheet I want to walk you through is the use of funds. So this worksheet is where you're going to keep track of the time frame that you need to keep track of the actual expenses. So here you enter the loan date, and it shows you, automatically calculates, let's say that was the 10th. It automatically calculates the 8 week period after the loan date. So here you can keep track of, just kind of keep track of your expenses for that particular time frame, so that you know whether how you're spending these monies. Plus, this can help you kind of do some planning and say, okay, well, what if we do the salaries, and the payday is this day, and then we got 3,000 here we got to pay, and then we're going to make this payday here. Okay, and then we got another payday here. Okay, so how are we doing? How are we spending that money? Or let's say that pay ends up being, lower. How much extra do we have to spend on other expenses here? All right, so key thing, you want to make sure that you spent the full 17.5, that you can account for the full loan amount in these categories. I'm going to highlight in here. Um, these are your payroll categories that we're concerned about, making sure that these are your, how do I say it? These are the ones where the government this is the good group. Okay, this is a group where the government wants to make sure that those expenses, total at least 75% of the loan. Don't spend any more than, oh, this can be a good, this can be green here too. You want to make sure at least 75% of the money goes in this group, and then no more than 25% in this particular this category here. Okay. So use this worksheet to, again, to help you just kind of keep track of how you're actually using that money, and as I mentioned before, just plan ahead as to how much will actually be forgiven, and then also how low the monthly payments are going to be as you work through the process. Very important tips, key tips at the end that I want to give you is, keep your finances in order. Get your finances in order. Make sure that they're on some kind of accounting program so you can easily run reports to pull the information that you need. Stay current with your payroll filings, and also keep your financial data up to date and reconciled. Now, we're going to be providing a PPP resource kit for you that you can download from my website at churchcpa.com/PPP. This will include the PPP loan application, which as of this day has been very difficult to find. But I've got some connections and was able to get this loan application. Also, I'm going to provide you with the PPP borrows information sheet that was issued by the SBA right about the time that they rolled out this loan application. And I'll tell you this, I think that loan application was kind of on hold a bit because they're working through it. Because the copy that I had, the file name had a version number and the date that they did it, which was March 30th. So they were still working through this, working through this application. I'm also going to include a IRS housing allowance IRS fact sheet. It's just a question so that if you're working with a lender and you're trying to prove your case with respect to housing allowance being treated as income, because they may think that, oh, we should only be able to just look at your payroll returns and that's your compensation. No, you might need a little bit more ammunition just to educate the lender that housing allowance is a form of compensation. Also, I'm going to provide you with the PPP section of the CARES Act. Now, the CARES Act in itself is over 800 pages, but I'm going to just extract for you the pages that I use to research that really relates only to the PPP protection program, and I'm also going to highlight for you the sections that speak to the information that I shared. Now, all the information is important, and I probably highlight all the pages, but that won't do you any good. But I would just want to highlight the sections that you might want to reference. I'm also going to share with you or give you my worksheet that I use to compute the maximum loan amount, the full-time equivalents, as well as just trying to keep track of your loan. Okay, so be sure to visit churchcpa.com/PPP to download your resource kit. I hope this information has been helpful for you. God bless you and have a wonderful day.